Hello, this is the chart profit video. Friday 7th of July, about 90 minutes into the trading day. Looking here at the E-mini S&P from the pre-open. 6-week controlling price for the E-mini is here at this point, 2436.50. It's been there for a while. Earlier in the week, on Monday, that was the high of the day, the exact high of the day, and we saw a pretty immediate reaction from that level, from that resistance. I'll just show you the current distribution that we're referring to here. This is a 30-minute distribution of the E-mini back to May, and here's the point that I just highlighted on the previous chart. Is the rejection at that resistance, this point of control here, the controlling price at 2436.50. You can also see on the chart this level here, which is the value area low. Here's the value area on the left of the distribution. Here's the value area low. So my way of seeing things, if this distribution is under development and ongoing, you should see a pretty clear rejection of a test of that level, as we saw here, and actually back over here and here. What I don't want to see is price being accepted at or below that level, which is here at 2418, and you can see that yesterday's value area is printed pretty much entirely below that level, and we did mark aggressive selling down here as well. This is red at low marking here. Described all this in this point here and said that I'm cautious here, especially in light of the recent sentiment extreme, which we'll now look at. And that, of course, is my version of the RIDEX assets ratio, which got above 15 for the first time in my database. Quite a number of years of data. That's the first time we've seen the ratio above 15. Previously, we've seen the ratio above 14. Two other occasions, you can see reaction here. There was a sell-off for about a month. Previously it led to this long trading range, but the point is it suggests that upside is limited. You can see in this example it was back over here in August, September before the ratio really declined to a multi-month low and set up the rally. And you can see here when the ratio got below 8 over here in May, again that the market started rallying again. So usually, historically, the ratio hitting an extreme, which it's just done, is usually an indication of over-enthusiasm from the retail trader. I would also say that at the same time here, bear assets or bear fund assets, if we look at those in isolation, that is actually the lowest point in my database. So very few bears out there, if this indicator is a guide. Very little change in the public poll from AAII this week. The bulls percent was almost unchanged. Bears percent is worth noting, and that was slightly higher at 29.9, but the previous week, 1 week ago, the bears percent was 26.9. That was a 25-week low at this point here. So again, an indication from the retail, very bullish, remembering of course that these are contrarian indicators. If we look at the breadth indicators here through Thursday's close for New York, concentrating on the bottom two indicators, which make up the breadth part of the New York market pulse chart, which I'll show you in a second. The net new highs 25 indicator, 5-day moving average in black here that we've discussed before, still just about holding above the 0 point, and the bullish percent number, that's the percentage of stocks greater than their 50-day moving average in my New York list, has just dipped below the 50 mark. So we get a tick here and across here, and that gives us a grey neutral reading for yesterday, along with the momentum at the bottom here. The chart profit price oscillator at the bottom is in negative territory and actually heading lower at the moment, and of course we have the aggressive selling that we've marked over here. So we have 3 instances over the last few weeks of aggressive selling across this range at the top here. Deteriorating, let's say, breadth and pretty negative looking momentum. Not a great scenario. We need to see this turning back up and some green coming in here at least, and preferably some green being marked at the top here. Quick look at the half-hour chart for the E-mini S&P. In fact, let's make this an hourly chart. Here's the important levels, and there's the rejection, or rather here is the rejection we looked at earlier, the exact rejection at 2436.50 from that controlling price. We've now dipped below the value area low here. A bit of a rally today. Just added a technical oscillator here on the hourly chart, we got oversold here, a bit of a divergence going on. So this could be just a little technical bounce. Ideally, we'd see a pretty swift rejection of price printing below 24.18. So ideally, I'd just like to see the market coming back. Only really happy if it prints back above that controlling price at 24.3650. Significant buying marked above here would be the best scenario, of course. With the pulse chart, as we've just seen it, looking pretty negative in the short term, and the sentiment hitting extremes recently, we probably want to wait for this. That would be a strong indication. On the tech chart, you can see the relative weakness here. This is the UK C100 chart. The 9-month point of control migrated slightly this week to 73.4750, which is here, and the FTSE at the end of this week, we're about 30 minutes from close, printing almost exactly at that level. Price printing time early next week below this point would be an indication of weakness. Let's say a day's bar. TLT, the T-bond ETF. Last couple of weeks there's been a real sell-off. In the longer term, initially at least the 8-month point of control should provide support. So in the longer term, as long as TLT holds above this level, we could consider this sell-off pretty strong, but a technical sell-off in the longer term. If we see price below that 8-month, and especially below 119 in the longer term, that's the major point of control at 119. So price below there would indicate most likely that the longer term trend, which a lot of people see here as down, would have resumed. A possibility that this is turned back up still exists. We need to see support initially at that level there, which is 121.63, and definitely at 119. Controlling price on GLD, the gold ETF, as we know, at 119.84, and we saw a lower high at that point just over a week ago, a very weak pattern, and we're on a new low for this move today. As I've been saying in the pre-open for many weeks, oil is a problem, a possibility for equities. It's in a really weak price location. We saw the major migrate to this level, 11.44, back in February. Subsequent to that, the 4-month migrated to this level at 10.28, and then we had price back underneath that. Migration took place in here somewhere, and this is really weak. We've seen a bit of a rally over the last couple of weeks. It looks to have faded right now. Consider this a key chart. This is the dollar index. The 2-year controlling price is down here at 95.57, been marked for well, a good while on the chart, months. Back in last year when it migrated to that level over here, and we've talked about this as a magnet and support, and we have seen a test over the last few days and a little bit of a rally. I think the important thing here is that initially this needs to hold. We need to see a base building here, but my point is that price underneath that level, underneath 95.50, let's say, time spent under here would be a real indication of further weakness for the dollar. That will have repercussions elsewhere, obviously. So a really key chart, primarily because of that support, that clear, obvious support on this chart. So one to watch right here. See an indication of strength on the dollar yen here. The 12-month migrated to 111.30. Price currently printing above that, indicating a weak yen here in this chart. We actually see the opposite here in the Euro FX chart. We've seen the chart rally above this level, again marked for many months on the chart, 113.29, which is the major controlling price. We now see the Euro FX chart printing above that level. That's a strong price location, and a little retest this week. This is again a key chart, I think, simply because again that major level and the reaction here. Finally, here's the pound dollar. As I've been saying, in the longer term, as long as the chart is printing above this level, which is 124.78, the 15-month controlling price, which emerged after the Brexit situation back here in June 16. We had this trading range through late 2016, early 2017, and this controlling price emerged. This whole pattern here is an indication of longer term strength as long as it holds above that level. And just in the shorter term, we have a 5-month here at 129.36. Currently at the end of this week, we're printing below that level. I would expect the price getting itself back above that point, which has now just emerged, that controlling price, and if we see some time printed above that, that would indicate further strength. The other thing to watch for, of course, is this 124.78, this point of control at this level, actually migrating up to somewhere in here, and that would be a very interesting situation for the chart. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.